quick recap of this week's markets. We had a very volatile week in both directions after all the tariff news announcements from the White House. A lot of the currencies were moving, gold was moving, equity markets in the US were definitely moving. So I'll just go through and mention any interesting things that I saw. So let me start with gold. Gold, it sold off the week before, but this week has been such a strong rebound week. Not only were all the gains made back, but we've had newer highs now. Gold closed the week at 3,237. This was very interesting to see. So on the 4-hour chart, you can see clearly how this happened. It actually sold off below the support, tested it 2 or 3 times, and then after on Wednesday just started going up nonstop this week. So the trend in gold is certainly still alive. For whatever reason, it may have sold off with the rest of the markets, but it didn't spend very much time below 3,000. Especially because the US dollar was also weak. You can see gold against the other currencies, it hasn't made so much all-time highs yet, the exception being the pound. Not even the yen has made another high against the gold. So yeah, we can say dollar was especially weak in the last several trading days here. So this move is a little bit mirrored in silver. Silver had a big sell-off as well, but it did recover to about $32. Copper, this is the weakest of the three. It recovered above 4.5, but again, not as much as silver. Checking Bitcoin. Bitcoin is also floating around 85,000, 84,000. So there could be, this long-term trend could still be intact, especially if it stays above the monthly Tenkan Sen. It still has a potential to consolidate around here and keep going up. But in the near term, Bitcoin is trading sideways or just weak overall. And Ethereum is also weak as well. Sold back down to 16,000. So yeah, this could turn into a double top embedded within another double top. So we'll have to see. All right, let me skip down to the dollar. So dollar index, we can see here, it's been the lowest ever since the rate hiking cycle has begun. Dollar index trading below 100. Dollar pound sold off. Pound was also weak, so you don't see as pronounced the move in dollar pound. But even dollar CAD has sold back down. That was the monthly chart. The weekly chart is going back down to 1.38. So we'll see if it can stabilize above these previous highs here, and if it might bounce on the Kumo on the weekly chart. So dollar peso, this one is relatively strong, still keeping the gains here at around 20. So dollar yen, this is one that I was looking a bit closely at yesterday. So dollar yen, it has also been weak, similar to all the other currencies, but it's starting to top out on the monthly chart. So this candle is not closed yet, but if it closes below the Kijun Sen and below the trend line here, we could see a sell-off back to the Kumo in the next few months. So it will all depend on how these price actions on the weekly and daily chart interact with the levels of support here. We could get a bounce towards the beginning of next week, but right now it is looking bearish. So in the daily chart, the Ichimoku lines have already started going down. There is a trend starting to form on the daily chart. You can see the Tenkan Sen is below the Kijun Sen, and all the lines are angling down. So yeah, on the 4-hour chart, the price is exactly bouncing off of the 4-hour Tenkan Sen here. So if this move were to continue, then it would have to keep selling off below these levels. I'll have to see next week, maybe Monday or Tuesday, how these price actions unfold, but this is so far the most promising market I'm looking at for my setups. USD Swiss franc, this is another interesting one. So on the weekly chart, we've been trading in this range, but after this week it broke all the way through these previous supports at 8.4. Not even a slight pause here. It did bounce a little bit, but then it sold off so sharply after the announcements on Wednesday. AUD USD. So this one, it's been interesting because Australian dollar was a weak currency the previous week, but this week has been somewhat of a rebound, especially against the dollar here. So we tested the COVID low support here. It's kind of hard to tell exactly where the support is because this was such a sharp sell-off and correction. But yeah, we've made back all of the gains since last week. So again, it's a little bit hard to tell where AUD USD could go. All right, AUD CAD. This one, CAD is a lot weaker than the USD recently, so not surprising to see here. All right, AUD JPY. So the yen has been a weak currency in the previous few years, but now it's sold off, or rather now it's strong, and the other currencies are selling off against the yen. So the yen is relatively strong in the last few weeks, but yeah, if you were to short AUD JPY, you would have to see how it interacts with the support level here. So on the daily chart, that doesn't look like it's happening yet. Friday, we did get some of a bounce, and then even this wick candle here. Yeah, this is how it happened on the 4-hour chart. Trading a bit sideways into the Kumo, so we don't have a clear direction yet. AUD Swiss franc, this is also going down. So if you were to take a bearish view on the Australian dollar, Swiss franc is probably the strongest currency to hedge it against right now. And just to look at the yen overall, it's been, yeah, trading a bit sideways. This is the yen index. Okay, so yeah, Swiss franc is really strong this last week. You can see this against Swiss franc JPY. CAD JPY, this could also break down depending on how weak the Canadian dollar is in the next coming weeks here. But very hard to trade, a lot of noise on the 4-hour charts. Even the daily has a good amount of noise. This is definitely exotic currency. So yeah, I haven't really been trading for the last couple weeks here. It's just too much volatility and not a clear sense of direction in the markets. Yeah, when you see, you know, big volatility like this, that means even the strongest players in the market, they're looking for a clear direction. So if you're trading short term, it may be possible to get some gains if you're trading in range bound or short-term trends. But for me, I'm just staying away right now. Even after this week with the recovery in gold, it's a bit hard for me to spot where to get in. Yeah, you could say, you know, this broke out and is going higher, But usually when you have a strong trend from a lower position, it doesn't usually keep going all the way. It might recover some way in between before continuing the move. So yeah, most of the move was made in the middle of this week. If you were trying to buy on Thursday and Friday, um, it's very hard to pick where you put your stop loss, and then even the gains you get, it's kind of minimal compared to the risk. So that's why I didn't really trade gold. I was looking back at any areas where I potentially could have gotten back in. Um, yeah, there was pretty much only one day on Tuesday, the Asian session or close to the London session. If I saw this double bottom form with this breakout, I could have looked at the London session a bit more and potentially bought at the open here, so around the $3,050 level. But yeah, I wasn't really checking the charts on that day, so I missed this whole move. Um, yeah, but this is just short term. A lot of volatility again in the markets, so it's hard for me to find any significant setups. So I expect the next week, I still probably won't trade. Maybe USD JPY, depending on how the price action forms. If there's a breakout indication towards the bottom, I might trade it. But it's a bit hard to say the dollar is going to go down more. I mean, especially when technically it has been sold down a lot in the weekly chart, um, and it's at the bottom of the dollar index here. So if you were going to say this is going to continue to sell down further with no consolidation, um, yeah, that would be a little bit hard to take that trade. And one other thing I will point out, if you compare the dollar with the bond markets, it's actually, I see something interesting here. So the bonds are actually trading up, US bonds. Let me open that one. So if you look at the yields, these are actually going higher. So after last week, 2-year yield is almost at 4% again. 5-year yield over 4%. 10-year yield around 4.5%. And the 30 year yield is actually approaching the relative highs, almost 5%. So yeah, this was pointed out by somebody else that I heard speaking. But usually, when there is risk in the markets and high volatility, the yield tends to go down as people buy bonds seeking safety. But right now, the U.S. is trading almost like an emerging market country, where the more risk there is, the higher the yields go, because other market participants, they're looking to get rewarded for the risk they're taking. So this plays a lot into the paradigm shifts that are happening these last few years, where previous correlations are no longer correlated in the same direction. They either could have no correlation or could be oppositely correlated. So this is one of those examples where the US yield is not trading in the same relation as the US dollar. Very interesting to see. So could the yields go higher? Maybe, but also there isn't much of a compelling reason in terms of the energy markets. So I'm looking at crude oil here on the NYMEX. Crude has broken through the support here. Well, I can't say broken. This week ended exactly as a doji, but prices are definitely making new lows. We had a low of almost $55, $54 at the middle of the week. Same with Brent. Oil prices are looking like they're going down. So if that continues, other prices in terms of inflation should also be going down. So yeah, the Fed right now they're saying they will take a wait and see approach, but according to what they've said previously, they may need to recalibrate to see if these restrictive interest rate levels are appropriate if prices are declining broadly across the markets. So yeah, very interesting to see if interest rates can continue to go up as the dollar weakens, or if there will be some kind of corrections indicating we might be at the extremes here. So that's just some background thinking in terms of why I'm not eager to sell the weakness in the dollar here. Yeah, it's very hard to tell. This could, in terms of technicals, this could be some kind of a consolidation, triangle consolidation like we have here. So it could end up, the dollar could end up getting bought against the yen, and we could have several more months of consolidation before this currency pair breaks in a direction here. So yeah, I think it's going to be possibly a slow beginning to the summer for me. I'm not going to take any trades until I see more consolidation setups for me.